It is now officially the summer of 2021, and it seems as though society is going back to its pre-pandemic ways. Specifically, a lot of my friends and family have been traveling to Las Vegas now that hotels, casinos, and all-you-can-eat buffets are back to normal, and I'm told that the crowds are definitely back. So this begs the question, as a small retail investor, how can I make an investment on the recovery of Las Vegas and its worldwide reputation as the gaming industry? I recently came across a REIT with significant exposure to Class A properties in Vegas that I am considering adding to my dividend growth portfolio. Is it a buy? Today, let's discuss VICI Properties, ticker symbol VICI. Hey guys, this is Nick with Nick.ZGI, and welcome back to my channel. I apologize for the lack of videos these past couple of weeks. I simply needed some time off to recharge. I hope you find some value out of this video, and if you would like to support this channel, I appreciate you clicking that like button, so let's get into it. Derived from the Latin phrase said by Julius Caesar, which means I came, I saw, I conquered, VICI Properties is a newer triple net lease real estate investment trust or REIT specializing in casino and entertainment properties across the United States. As of this time of recording, VICI owns 28 gaming facilities spread out across 47 million square feet with over 200 restaurants, bars, and clubs, 17.8 thousand hotel rooms, 4 champion golf courses, 50 plus retail outlets, and 34 acres of undeveloped Las Vegas land. It also owns iconic Vegas properties such as Caesars Palace, Harrah's, and as well as other Caesars, Harrah's, and Harvey's locations in Atlantic City, Iowa, Illinois, New Orleans, and many more. But the lion's share of the company's revenue, 42% to be exact, came from Las Vegas, and the remaining 58% came from other regional markets. Lastly, it was announced just this past March that VICI Properties would be purchasing the Venetian Resort, the Sands Expo and Convention Center in Las Vegas, from Las Vegas Sands Corp. For $4 billion in cash, representing a 6.25% cap rate. I will later discuss in the video why I think this transaction will only continue to propel VICI to be a premier REIT, betting on the post-pandemic recovery on the domestic gaming and casino market. For most of 2020 and a good chunk of 2021, all eyes were on Las Vegas and whether tourism would return to pre-pandemic levels. Real estate across all sectors were impacted by the prolonged government shutdowns and reduced capacity limitations. While many traditional retail and office REITs saw occupancy and rent collection rates tumble during the pandemic, VICI, on the other hand, managed to maintain 100% on-time cash rent collection during the 2020 pandemic period. Long-term triple net leases with pristine best-in-class tenants has allowed VICI to continue to grow its adjusted funds from operation, or AFFO, the earnings metric we evaluate when analyzing REITs. In its first full fiscal year of 2018, VICI owned a $1.43 per share AFFO, $1.48 per share AFFO in 2019, and $1.64 per AFFO in 2020 despite the pandemic. The 2021 AFFO per share earnings look bright for VICI as the company's guidance is between $1.82 and $1.87. Sufficient annual AFFO earnings growth translates to cash dividend increases each and every year. The company announced a 9.5% dividend increase in 2018, a 3.5% dividend increase in 2019, and a 10.9% dividend increase in 2020, now paying 33 cents per share quarterly, with the next expected dividend increase to be announced this fall. All said and done, VICI wants to target a 75% AFFO payout ratio. As you can see, VICI has a starting dividend yield comparable to other REITs I hold in my portfolio, such as Realty Income, National Retail Properties, and WP Carey. However, out of the bunch, VICI has the lowest current AFFO payout ratio at 71.7%, meaning that there is more runway for future dividend increases. Moving forward, I expect the Venetian transaction to add much fuel for VICI to continue to grow its earnings. Per the March 3rd acquisition press release, the Venetian property will add another $250 million of annualized rent, growing VICI's revenue base by almost 20% accretive to AFFO growth after the close. And thanks to prudent financial management, VICI appears to have zero debt maturing before 2024, with very reasonable debt maturity levels scheduled in the years following 2024, allowing the company to acquire more gaming and casino properties. Lastly, I just want to thank Joseph Carlson's recent video on VICI, as that got my brain started on this. I want to talk about the upcoming Las Vegas attraction that I think will be absolutely wonderful for the future of Las Vegas that has yet to be talked about. And that is the MSG Sphere, opening in 2023, co-owned by the Madison Square Garden and Las Vegas Sands Corp. Yes, the same Las Vegas Sands Corp that sold the Venetian to VICI. Just by looking at their website, this venue is something that looks like it's from the future. Not only will the MSG Sphere continue to attract events from esports, music, and live entertainment to the Las Vegas Strip, but notice where this venue is being built. From this Google Maps view, what are the two properties just west of this venue? That's right, you have the entire Venetian Resort, which VICI is acquiring at the moment to the northwest, and Harrah's that they already own to the southwest, and Caesar's Palace just down the block. The MSG Sphere will have a capacity for over 17,000 guests. There is a high probability that those wanting to attend future events at the venue will want to book hotel rooms at the nearest resort properties to reduce driving or ride sharing, while at the same time being located at the heart of the Las Vegas Strip. Zoning out, I consider this 4-block area to be the innermost section of the Strip, and thus prime real estate where tourists can feel free to roam around the fountains, buffets, and casinos within a reasonable walking distance. This slide was presented in the company's May investor presentation that succinctly polishes my viewpoint that upon the acquisition of the Venetian, VICI will own 99 acres right in the heart of the Las Vegas Strip. The areas noted in green are existing properties such as Caesars and Harrah's, the Venetian in orange, and the dark gray, including 28 acres that VICI has the right to purchase nearby the Caesars Foreign Convention Center. With the majority of the country now vaccinated, I am increasingly bullish on the prospect of a stronger Las Vegas. Gambling revenues in Clark County, where Vegas is located, fell 36.8% in 2020 due to the pandemic. However, this figure is expected to rise 35.5% this year in 2021 and another 10.7% in 2022. On the heels of a bull stock market and a recovery play, VICI is yielding just over 4% as of the time of recording. Through VICI, I would love to be a part-time owner of a pristine Las Vegas real estate while earning a 4% dividend yield and seeing mid to high single-digit dividend growth. Over the next month or two, I will seek to establish a position in the Nick Does DJI M1 Finance portfolio, which I will leave a referral link in the description below so you and I can each earn $30. But let me ask you guys, comment down below if you have heard of VICI and if you will add this REIT to your portfolio. Why or why not? Please note that this video is not intended as financial advice, nor am I a financial advisor. Past performance is no guarantee of future results, so please take this information with a grain of salt. Please do your own due diligence and research when deciding to invest in investable securities. If you found this video helpful, please consider clicking the like button and subscribing to my channel. Hit the bell notification to receive an alert on all the latest videos. The YouTube algorithm likes these sorts of engagements and helps my channel get shown on more homepages. Until next time, take care.